What's going on, guys? This is Brooks Beard with Think and Bank, your credit mentor, Mr. I Do Mortgages. And I want to share with you guys how to get a perfect credit score in 2020. Okay. And there's 5 components that make up your credit score. And I'm going to share with you those 5 components and when you learn these 5 components, it can drastically improve your credit. Okay. It can get you what that credit score you need in 2020. And just to kind of give you guys a little bit of background about myself. I've been in the financial industry for about 12 years. I worked for numerous investment firms. The last 8 years, I've been a licensed mortgage loan officer, and I've helped over 1,500 people either refinance or purchase a home. And so I've been around the block and back when you talk about this financial industry. I was also I worked for an investment firm as a financial advisor for 4 years prior to getting into the mortgage industry. And so I've been on the trade desk at certain investment firms, and I've traded stocks. I did just about a lot of different things in the financial industry. But when I transitioned to a mortgage loan officer, that's where I really got a better understanding of credit and how credit works, and from the consumer side of credit and then from the lending side, because it is a difference. And if you've ever tried to get approved for a mortgage, and let's say you checked your Credit Karma or one of these sites, and then the lender pulled your credit, you'll see it's a difference. Okay. And in my program, I break down why it's a difference, and the components that lenders look at in regards to your credit profile compared to these different other sites and things of that nature. So I do have an online credit program. It's called the Credit Maximizer 2.0. And within that program, we show you how to repair your credit yourself. Okay, you don't necessarily have to pay for expensive credit repair. You can do it yourself, and we break down step by step on how to remove negative items such as collections, charge-offs, bankruptcies, foreclosures, outdated student loans, and then also how to rebuild your credit. So if you don't have no credit at all, we show you step by step how to rebuild your credit and things of that nature. Now, in today's lesson, I'm gonna basically break down the 5 components of how your credit score is calculated. So that way it can help you have an understanding of credit, and then also it can give you basically the foundation of how you can improve your credit in 2020. All right. So the first thing you need to know in regards to how your credit score is calculated, the number one thing that they look at is your payment history. Now, a lot of people think that, just making your payments on time, that's all you need to do to have a perfect credit score. That's not true. Payment history, it was a part of it, but payment history makes up 35% of how the credit bureaus calculate your credit score. But guys, there's another 65% that makes up how they calculate it. So again, payment history only makes up 35%. But now that's the biggest thing that can really impact your score, and that has the most weight in regards to the calculation. And if you do have some late payments on your credit profile right now, there's something called a goodwill letter that can help you remove those late payments. Okay, and you can get access to those goodwill letters on my website. Okay, and and it's probably popped up somewhere on this video, but you can also click below and get access to these goodwill letters if you do have late payments. Okay, now there's other strategies also that I break down in my program, but those goodwill letters are definitely the first step to getting those late payments removed. The second thing that makes up your credit calculation is credit utilization. Okay. And when I say credit utilization, that actually makes up 30% of the calculation. Okay. But when we say credit utilization, that's basically, let me give you an example. Let's say you had a $1,000 credit card. Okay. The rule of thumb and the standard is you don't want to use more than 30% of that credit limit. So 30% of 1,000 would be $300. So the most you want to spend on that card or that credit card is $300, or will start impacting your score. Now, if you want the perfect credit score, typically people that have 700 to 800 credit scores, they keep their utilization between 1% and 7%. So if it's just hypothetically speaking, if it's a $1,000 credit card And if you only want to use 7% of that, which would be $70. Okay, so that would be your limit. And I tell people, get in the habit of saying, well, instead of the standard being 30%, just make the standard 7%. Okay, never go over 7%. All right. The next component that makes up your credit score is the length of credit. Okay, how long you've had established credit. So if you don't have no credit, sometimes that's even better, because there's ways you can get established credit cards on your account, like overnight. Okay, where you can go from having zero credit to an account that you have on your credit that has 10 years of established history. Okay, and most people that have a 800, between a 7 and 800 credit score, they have established credit history of around 9 to 10 years. Now, I would say the rule of thumb is to have at least 5 years of established credit. Okay, and there's certain ways that you can actually get established credit, and we actually break down those step-by-step processes in our program. The next component that makes up your credit score is credit inquiries. Okay, and I know you guys probably understand what credit inquiries are. If you ever apply for a credit card, you've applied for a mortgage, or applied for an auto loan, someone is going to pull your credit to see if you are credit worthy. Okay, and the rule of thumb, you want to have at minimum only 4 to 5 credit inquiries on your credit score. Okay, now when you start to get over that, you start to get 10, 20, 30 credit inquiries on your credit score. That tells if you go apply for a mortgage, or you go apply for certain things, that tells that lender that you've been applying for a lot of stuff. And why are you applying for a lot of stuff? Because if you wouldn't have had to do that if you were approved right away. So that's telling me something about your credit profile. So they kind of frowned upon having a lot of credit inquiries. Now, I won't beat yourself up over it. It only makes up 10% of the calculation. But the rule of thumb, you don't want to have more than 4 to 5. Typically, after 12 months, it doesn't impact your score like that anyway. And then after 24 months, it will typically automatically drops off. Now, sometimes you do have to send in maybe a dispute letter to get that credit card removed, because sometimes it doesn't come right off in 24 months. You have to actually dispute it, then typically to come off. Okay, and we have credit inquiry dispute letters on our site. So if you're looking to dispute credit inquiries, we have the strategies and the templates to do that. Right, and last but not least, credit mix. And a lot of people don't really understand this, but credit mix makes up the final 10% of your score. Okay, and basically what credit mix is basically like just a regular, it's a revolving or installment account, such as an auto loan, a mortgage, a credit card, a gas card, a store card, just anything that's a revolving account or an installment loan. Okay, so the rule of thumb, you want to have at least 4 to 5 different types of mixes of credit. And again, when I say mix of credit, I mean you got an auto loan, a mortgage, a gas card, a cashback card, and a home equity line of credit, maybe. Just 4 to 5 different mixes of credit. All right. And again, that makes up 10% of your credit score. All right. So guys, I know we've kind of broke down how your credit score is calculated, and then some ways that you can actually even improve your credit if you do have, late payments, and things of that nature. So I hope this was helpful for you guys. I want you to get that 700-800 credit score in 2020, and you can do this yourself, guys. I personally improved my credit from the low 500s, and I have one of the top credit scores in the country at an 820/21 today. So, and I did it all myself, and I basically took all the knowledge and information I learned and put it into a course to basically give you the foundation that I didn't have when I was repairing my credit, so you can get results faster. Most of my students in my program are getting results within 30 days. I mean, I've had students that get results in a week. I've had students that get results in 30 days. And, typically it's going to be about a 90 to 4 month process to really get the score you want, okay, with that program. So if that's something you want to be a part of, and you and have a burning desire to improve your credit so you can go out there and buy a house, the house of your dreams, or that car you want, or you just really want to try to get your budget in order. Typically people with bad credit, they pay typically $300 to $500 more a month compared to somebody with good credit. Okay, so just improving your credit, you can actually reduce your budget without making more income. I hope that sunk in. So, because think about it, you don't necessarily, if you, let's say you go out and refinance your car where you maybe had a 15, 20% interest rate if you had bad credit, and now you can get that interest rate, maybe 0% interest, or you can maybe get in 3 to 4%, and that could drop your monthly payment $200 to $300. Talk about a mortgage. You go refinance that mortgage and drop your interest rate even just 1%. I mean, that could get you $200 to $300 a month in savings. If you go out and get new, auto insurance, okay, because auto insurance companies look at your credit score to dictate how much your annual premium will be for your auto insurance. So if you get better credit, you can reduce that. Homeowners insurance. If you're going to look for an apartment and you have bad credit, they may ask for 2 to 3 months of a deposit just so you can get into that apartment. Even jobs now more than ever with the coronavirus and stuff going on, just imagine, 17 to 20 million people are out of work. And when they start going back in the workforce, what do you think they're going to look at to make a final decision or be the determining factor to hire you? They're going to look at your credit. And if your credit is not better than the next person with the same exact resume, who do you think they're going to pick? The person with the good credit. So guys, it's vital that you improve your credit. It's vital that you get in credit position from, just a holistic perspective, guys. And I wanted to share this information. I hope it was helpful to you. Definitely subscribe to my YouTube page. I'll also be giving more tips to help you with your credit. And guys, again, I will see you on the other side. Check out my next video.